Can you talk us through how you see small, medium-sized enterprise demand for your products at the moment?
Sure. So, first of all, we were very pleased with our Q1 results. We beat analyst expectations across revenue, profitability, and free cash flow. And we reported, Q1 revenue of $1.141 billion, up 3% year over year. We did see growth in our enterprise, which was up 5% year over year. And then in terms of SMB, which we've gotten a lot of questions about, we support that segment of our business mostly through our online segment. And that actually did better than we expected this quarter. So very pleased with the results across all of our segments.
You are a numbers person. We saw the number of enterprise customers decline slightly, but there was a reshuffling of who actually fills into those gaps. They're accounting for the difference of how you count customers. But why are they declining? Well, how do we digest that decline?
Yeah, what I really want to point out, as you just said, we did transition some customers from the direct segment online just to promote better self-service. These are typically, much smaller customers. Where we continue to see growth is in the upmarket. So when you look at customers that contribute more than $100,000 of trailing 12-month revenue, that was actually up 8% year over year. So that's the segment of the business that is really helping us drive growth and where we're really focused. On the smaller end, those customers, we give them a lot of flexibility. They come and go as they please. They sometimes, turn the service off while they take a break with their kids, and then they come back when it serves them well.
Let's talk about some of the areas that you have been pushing into to diversify. In particular, I'm thinking of contact center, of workforce engagement management, of AI. Now, Citigroup analysts, and I know you love having analyst notes reported back to you, but they say find it a bit hard to see a durable pathway to re-accelerating growth. Paint that picture, therefore, of re-accelerating growth.
So we talked about this a lot on the call yesterday. We've said that we expect growth in the second half of the year to start to re-accelerate. You mentioned contact center. We announced yesterday we have over 90 customers now in our contact center that are contributing more than $100,000 of trailing 12-month revenue, which highlights these are sophisticated buyers, and our products are now competing with the top 4 in the Gartner Magic Quadrant that you probably know all the names of. And that combined with the strength we continue to see with Zoom Phone, WorkVivo, which there was news about this last week where Meta is discontinuing its workplace, and we have been named the preferred partner for that transition, which opens up a whole new opportunity for us. So those are all the components that are going to lead to re-acceleration in the back half of the year and then into FY26.
Let's talk about competitors, though, because Microsoft Teams is a strong one. And we understand that perhaps there's been some regulatory conversations coming from Zoom about unfair competition. How's that going?
Well, there's a lot that's going on in the EU around bundling. They unbundled it there. However, until they really get to a competitive pricing for their products, it's not really a level playing field. And that's what would serve everyone in this industry, we believe, the best, including customers, because having a really level playing field for the 2 strongest competitors, which is, of course, Zoom and Microsoft, we think is the best approach.
Are regulators listening?
I guess we'll wait and see how it continues to evolve.
Well, Europe's always quite busy and quite quick on their regulatory decision-making. But I'm interested in what, therefore, you are doing for an investor base who is still waiting for this re-galvanization, this re-acceleration of growth. They're seeing some of the areas that you're pushing into and products. Jeffrey's saying, look, we want to see perhaps a little bit more buybacks in terms of shares. We're thinking about potentially strategic M&A. Have you got any news for the investor base there?
Yeah. So, re-accelerating and top-line growth is absolutely our number 1 priority. In the meantime, while we are focused on investing there, we are also focused on giving returns back to our shareholders. So last quarter, we announced a $1.5 billion share buyback program. During Q1, we did buy back 2.4 million shares, and we will continue to execute that over the next 7 quarters. And in the meantime, also looking for opportunities to deploy our cash if we see strategic M&A opportunities that would accelerate top-line growth or accelerate tech development as well. Those are the 2 areas that we really keep front and center.